Hey miners, welcome back to the channel McNallie Money, the new home of power mining analysis. What a doozy Anthony Power and I have for you today. The CEO of Core Scientific, Adam Sullivan, hot off the heels of Q3 earnings yesterday. The company just hit a new all-time high in trading. I just got a notification on my phone about 5 minutes ago. Very excited to get into this interview. Before we do, smash the like button, you guys. Big help to myself and the channel, 100% free to do. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below if you're currently holding shares of CORZ, what your thoughts are about this company's strategy moving forward, and your price target as we move into 2025. Now, with that being said, let's get into today's interview. Okay, guys, so that's right. Adam Sullivan back on the channel. What a phenomenal year we're having from Core Scientific. They just came out with Q3 earnings. We just saw production results as well, plus a number of other key initiatives that we'd like to talk with Adam about today. So first and foremost, thanks for making the time. Great to see you again. And how are you doing today, Adam?
I'm doing great. Happy to be on the podcast again.
Awesome. Most definitely. I saw just before we started filming, you guys are flirting with either 52-week or all-time highs. We couldn't get that straight, but very good share price performance this morning. Obviously, the market is picking up on the strong Q3 earnings and outlook into next year with the CoreWeave deal. So we wanted to start off, Adam, with some of the key updates since our last discussion. I know you guys upsized the CoreWeave deal, the convertible notes. You got 100 new megawatts at Picos. So there's a lot going on that we wanted to get maybe a refresher on first here.
Yeah, absolutely. Yeah, I mean, I think the Q3 was defined by hitting a lot of the catalysts that we said we were going to, set out to do. So in Q3, we not only executed on the entirety of the 500 megawatts of IT load with CoreWeave, so we exercised that additional option agreement. That last option agreement actually came through just a few weeks ago, so it was a little after Q3. We also cleaned up our balance sheet. I mean, this was a huge part of our emergence from Chapter 11, was cleaning up the balance sheet, removing the restrictions, removing the covenants related to essentially all of our assets were had a security lien against them for all of those notes. So the senior secured notes, the convertible notes, et cetera. We were actually able to clean all of that up in kind of one swoop here. We did the $460 million convertible note offering. That was an extraordinarily successful offering that we were really excited to complete. It also helped us put almost $175 million in cash in the balance sheet. A lot of the cash that sits on our balance sheet today, not only for general corporate purposes, but also for us to be able to go out and be much more acquisitive on the site side. And it's a great process that we're going through right now. Obviously, we announced Alabama during our earnings call yesterday. We also announced that we're converting another one of the sites, 100 megawatt site, that we have the expectation to sell into the HPC market. So we're incredibly excited about the progress we've been making. And one of the things that we like to do is make sure that we what we tell the market we're going to do, we know we can do. And so that's something that I think we've done really well over the course of 2024.
Yeah, I mean, earnings itself, I mean, you touched on there about the great things this particular quarter three. And actually, to the untrained eye, if they saw your earnings report and just looked at a couple of numbers, they thought, oh my God, what's happening here? But once you start going in and looking at the numbers, taking away the sort of the non-cash items, I mean, it's clear to see that you're operating cash flow positive as a company, which is great to see, especially as we've gone through a full quarter post-halving, so with no benefit of the pre-halving like we had in quarter two. And it didn't look as in terms of when you take that position out there for the warrants and the valuation of the warrants on the balance sheet, which was over 400 million of that loss. Actually, you're then down to sort of like smaller amounts. When you start looking at depreciation, stock compensation, you had a positive EBITDA of about 10.1 million, which of the three miners that have released their results up to now, that's the only one that's adjusted EBITDA positive at the moment. So that was a good sign. I wasn't quite expecting that from any of the miners. So congratulations on there, because I thought Q3 was still going to be a challenge for miners with regards to hash price and regards to the fact that people are still the bigger man's a buying machine, so you've got depreciation to apply. So no, it was great. It was great to see that.
Yeah, and that's actually something that I think a lot of people on Twitter have picked up upon, and I think the people that follow Core understand what's going on with the warrants and the mark-to-market situation with those. I think the people that are fans of some of the other companies like to point it out that that's just losing money. That's entirely a gap situation. So as our stock price increases, the value of our warrants increase, and we have to take mark-to-market adjustments against those. So that's the reason for a majority of the net loss in Q2, and similar situation in Q3. It is hundreds of millions of dollars because we're increasing the value of our equity that significantly.
In terms of those warrants, I mean, do you have an idea approximately how many have been converted from the CORZ W and CORZ warrant?
Yeah, very limited CORZ Ws have converted. Those are the cash exercise warrants. They have to pay $681. That's mainly driven by the fact that there's still a significant amount of option value embedded in that warrant. There's about just over 2 years left in that warrant.
Yeah.
And so as our stock price increases and as time decay starts to eat into that option value, you should expect to start to see those exercised. But, given that there's, probably over $1 of option value still embedded in that warrant, we're probably not going to see those convert in the near term unless our stock price increases significantly. On the Z warrants, so those are the penny warrants, we've seen pretty significant amount exercise, but we're still left over today with about, I believe it's about 27 or 28 million Z warrants. Frankly, I would expect to see those convert. There's really no reason why they shouldn't. They would get better liquidity in the equity, and it's a penny to exercise, and they always trade about a penny below where the share price is. So it would probably make sense for most people to exercise them.
I exercise mine, by the way.
There you go. Interesting about the W warrants. That's, I guess, the downside of achieving your targets in record time and the share price moving up that quickly, Adam. But great to get an update there. We want to talk about the conversion process as you approach your big HPC push next year. But before we do, you mentioned this diversified pipeline you guys have. You're announcing new locations, new sites, about 570 megawatts right now of HPC over the whole portfolio. Can you tell us about some of the, I guess, highlights within this portfolio right now that investors should be watching?
Yeah, so of that the number is actually higher than 570 now, but as of the 570, 500 of that is all contracted to CoreWeave. The additional 70 that we announced is another site that we always say there's really three areas that define whether a site's Bitcoin mining or HPC. It's power, it's latency, and it's environmentals. We had to sort out a power component related to that site, which we've sorted out, and that's the reason why it wasn't initially brought to market. But we feel very strongly, based on the fact that once we got clarity from our utility and we were having discussions with a few clients, it became a very attractive site. So we're incredibly excited about that facility. And then obviously we announced Alabama. You want to talk about where demand is right now? It's 2025 and 2026 delivery. And the ability to give someone 11 megawatts in 2025 and then grow to a total of 66 megawatts of critical IT load, that's extremely attractive to all types of clients. And so we're excited about those megawatts as well. I mean, that brings us to in the market right now with about another 130 megawatts of critical IT load. And frankly, the demand is off the charts. It's an incredibly competitive process for folks. People are really interested in working with us. They know that we're developing more HPC infrastructure in the United States than really any other developer is at the moment. And so it really puts us in a seat where we can really help them, explain to them what other people are building towards, what their requirements are, what they're designing for. And we can help guide a lot of these customers to, this is the best way to build this facility, and this is actually the best way to do it faster. So one of the things that we're very good at is our design engineering team's very good at designing around supply chain constraints. And so we can actually come to them with solutions to actually deliver stuff faster, which is something that they're incredibly interested in.
Is this, I mean, you said there's a lot of interest there. I mean, when we went down to the Denton facility back in June, and you talked about those initial conversations over the first 200 megawatts, there was, I think, like 50 offers of interest in there, and you managed to reduce those down to ones that fitted the criteria. Are you seeing that sort of like, are you seeing a good number that would fit the criteria as CoreWeave fitted for the first 500 megawatts?
Yeah, I mean, our process had to be slimmed down to a specific number of clients. It's a significant amount of time for design engineering teams to be meeting with their, the potential clients' engineering teams, doing all of the site tours, doing all, giving all of the due diligence materials, all of that, all of those items take a lot of time. So we really narrowed our list down to about 10 clients that we feel like are very strong for us to be able to go to the market and get project financing behind the projects. So that's really why we've narrowed down the client list. We're excited about, all the clients we're currently working with on a potential deal here. So it puts us in a really good position for continuing to grow this business.
I mean, to be honest, we spoke to many of the CEOs of all the other mining companies, and even the ones that are saying we're going to stay a pure play miner, and there are one or two out there that are really want to carry on doing that. We know CleanSpark and Zach and Matt have regularly stated that through social media, through interviews. However, we were in Amsterdam recently, and Zach commented on how good a contract that was for you guys. And surely, you think every Bitcoin miner wants that contract. My sort of question is, I'm an accountant. I can do the numbers. I look at your market capitalization now. I look at that contract there with the sort of like the amount of net profit, and I say net profit of around about 6.2 billion over the duration of that contract. And I'm not sort of seeing any of that sort of really priced in that much into your market cap at the moment. Are you sort of like, are you wondering, is it because the size of the contract? Is it, will it be a case of once the revenues start physically coming through in 2025, things will change then? But I mean, we're seeing other miners talk about HPC and their market capitalizations are exploding at the moment. And you're the ones with the contract. I mean, everyone wants that contract. No one's going to get the size of that contract, in the near term. Well, I don't think so in the near term. Although listening to you now, it sounds like there's a massive demand. And actually, if anyone's got a big site that's got the capability, they're also a sort of like a competitor to CORZ Scientific delivering this. But what's your view on the sort of like, how a company would be valued based on the HPC element of the business?
I mean, I think it's interesting, right? So it's like we signed potentially the best data center contract in history, potentially will be forever the best contract ever signed. And where we're seeing the market move to today, it's a little bit different. We talked about a little bit on the earnings call, in terms of what we're looking for on a per megawatt basis from clients now. It also means that we're getting higher lease rates as well. I think for other folks in the industry that are looking at HPC contracts, I think some of them are actually going to have to go for joint venture partners in order to actually execute on this type of a large scale deal. You think about even 100 megawatts of critical IT load. That's, let's call it $750 million project just to build the infrastructure. They're putting in $2.5 billion worth of GPUs. Large hyperscalers aren't just going to hand that project over to someone who's never developed a data center before and maybe only has like 2 or 3 people on their team that's built a data center. That's not what their expectation is. When they show up to negotiate a deal and to evaluate a site and have design engineering meetings, they show up with 30 to 40 people. And that includes their AI division, their data center division, their construction team, their engineering team. They show up with the full slate of people, and they expect to have an equal counterpart on each of them. And so that's really what differentiates us as a core is we have people from, Equinix, Digital Realty, CoreSite, Switch, DataBank. We have all of these different companies represented. And when they walk into the room, they recognize these people. They go, oh yeah, we built data centers together at this site. And that's really what differentiates us in this process. But the demand right now is significant. So that's the reason why you're seeing a lot of these hyperscalers even evaluate sites that other Bitcoin miners have, is because the demand right now is so significant that they're saying, yeah, that site's interesting. We're going to have to partner. We're going to have to bring in another partner here to help develop it. But that site, in terms of what its value is from a power perspective, latency perspective, environmental perspective, is really attractive to us. And so some of the assets that are owned in this industry are extraordinarily valuable in the market today. It just comes down to, is there the right team? And when people ask about supply chain constraints, really the biggest supply chain constraint in this industry is human capital. Actually having the talent and bringing all of that talent into one place. it's the most challenging thing you face right now in the market.
That's so interesting to hear that the human capital or people component of this as the limiting factor. We've talked a lot, even with the team from Rosso, about data center design, about immersion design. We've definitely heard there are differences between these companies, but it's great to hear you talk about the size of these meetings and the counterparties at each of these companies, Adam. Now, I've been super curious. I've seen pictures come out. I know this was one of my questions when we were down in Denton about the conversion process itself. So can you walk us through how logistically this is even working, moving Bitcoin mining machines, replacing them with GPUs? Any learnings you guys have had, anything that's been maybe surprising? You mentioned the amount of experience you gain through the process of building these data centers. So maybe share some of that experience with us.
Yeah, so we went through a pretty major miner migration over the course of the past few months. Most of that is complete at this point. There are still some minor migrations. But it's a significant logistical lift to move tens of thousands of miners across facilities, limiting downtime. We didn't have really a significant hit to our Bitcoins mined, just the way we were able to structure all of this operationally. So that part was normally a hard part. We made it an easy part, luckily, just by a lot of advanced planning in terms of when machines were going to be coming off, when they were going to be replaced with more efficient machines that might have been coming in from a different facility. But really right now, we have two sites that are undergoing significant demolition, right? So in some cases, we're keeping the buildings. In other cases, we might be demoing a significant part of that building to set up a new building. But I mean, from day one, the moment that you start construction, there's hundreds of people on site, and that ramps over time. And so you look at all of the construction trailers. I mean, there is no lack of construction trailers on these sites, because at full bore, when we're fully all the way under construction, there's going to be over 2,000 people on the site at any given point in time. And so that's really the difference. It's like, how do you manage 2,000 people on the site? Luckily, we have a whole team that's been doing this for years, decades, that knows exactly how all this works. But I mean, it's a logistical challenge. And really one of the things that we're working on right now is like, okay, so we have the weeks for the delivery of all the items in the supply chain. There are dozens of different items. And now we're at the point where we have to dictate to the delivery people for an item in, let's say it's August 12th. Well, you have to arrive in the morning on August 12th, because if you arrive in the afternoon, you're not going to be able to fit into the loading dock. These are all the things that you actually have to start planning out on a logistical level, where it is down to the hour, and you're planning out over the course of an entire year. And then if any of those timelines slip, that's where you're slipping days. But the problem is, if you slip days on the delivery of a certain item, then it's like you have to replan your certain contractors who are coming in to either install or do what's the next step in that process. And so 2025 is coming down to the hour at this point in terms of all of the scheduling that we're doing for the initial build outs. And then once we complete 2025, then it's 2026 comes in right behind it. It's like we have all the delivery schedules for all of the equipment. Now we need to start planning actual down to the hour of the delivery schedules of when these people have to come in. But it is I wouldn't say it's necessarily learnings as much as it is right now we're in the thick of it for logistical planning on all of these sites, especially because you look at some of our sites, it might be a smaller town in terms of where we're located. So it's coming down to now it's like, okay, well, this size truck, what are the actual roads that they can take to get to this facility, right? And so, I think it's a fun game for ops people. I think they love this type of challenge. So I think, it gets them excited every morning when they wake up. But, I think it's something that, over 2025, us being able to show our execution capability is going to be a big key to our valuation going forward. Touching back on a previous question, I think being able to show execution capability, showing these facilities come up on time, all that's going to play a massive role in our valuation over the course of 2025.
Yeah,
Yeah,
it's
25 is a number I remember. That was the number of years I did in the military, and actually the logistics guys in the military were some of the best people out there. So I hope you've managed to get some of those in your team.
before we jump into the finance, I know the accountant wants to know the finance side here. I just wanted to throw out a comment. You guys put out daily production reports, Adam, and I asked this question in Denton: will there be a major disruption to Bitcoin mining as this conversion happens? You really haven't missed a beat. Anthony and I just talked about this on the channel yesterday. It's always between 10, 11, 12 Bitcoin a day. We haven't seen any change. So just a testament. It sounds like Tetris on steroids there, which is a nightmare in my mind. But to your point, Anthony, some people live for this kind of strategy. And apparently you've got those people on your team, Adam.
Yeah, and kudos to that team. I mean, those guys and gals are just absolutely wrecking it with the impressive results that we've been able to show on these minor migrations.
Awesome. In terms of the funding, so obviously you mentioned earlier in the conversation about 750 million being advanced to you by CoreWeave.
Mm-hmm.
Are we talking about, is that the sort of like the full amount required to deliver these sites to where they need to be? Or is it, I mean, at the end of the day, you guys are paying that, you'll pay that back when you start receiving revenue. But is there more funding required for the 500 megawatts than the 750? Or is that sort of like the initial budget going forward?
No, so we said it's about 5 to 8 million to convert existing sites per megawatt. That 750 million is only representative of the 1.5 million that we have to pay back to them. So these sites are much more expensive than what the 1.5 million per megawatt is. It's in the billions of dollars in terms of what is being spent on infrastructure. The 1.5 billion though is, or the 1.5 million per megawatt, which totals $750 million. That is what is credited against their contract. At 50%, and it really takes just over 2 years for us to work through the entirety of that credit. And so that's what we're paying back to them at no more than 50% of any single month's contract value.
So there's obviously a bigger part that you guys have got to find to deliver effectively the whole project. I suppose that leads me on to the fact, yes, you've got the $460 million or some of that money available from the actual convertible notes. And yes, there'll be an element of the warrants as they get exercised. There'll be more capital coming through from the CORZ W warrants. I suppose as we get closer to January the 23rd, that'll be a year outside of Chapter 11. I'm assuming from that point in time, Core Scientific will be eligible for applying for an ATM like we've seen all the peer miners do over the previous years to grow and expand. Is that something that you're planning to get ready for when that date arrives?
Yeah, I just do want to go back on one thing that you touched on earlier in that point. We have no CapEx requirements related to these build-outs. All of the CapEx is fully paid for by CoreWeave. So there is no additional funding that we have to pay for this build-out. As we look towards new build-outs, the reason why we're focused really on that equity check portion being covered by the client and upfront payments is because that means there's really no new capital needed off our own balance sheet outside of project financing that we would bring in alongside of it. So we're trying to create a system where we don't have to raise a significant amount of capital on to the corporate balance sheet in order to execute on these projects. And really what corporate balance sheet cash is used for is going out and acquiring sites, maybe buying some lead time items that might be longer out in the spectrum so that we can actually deliver on the timelines that we're hoping for new projects. But other than that, there's really not a significant amount of capital off our balance sheet that is needed. Now to your question about, equity capital raises, it's something that we're going to have to evaluate over time. Obviously Digital Realty, Equinix, they all have ATMs. It's something that we're going to have to evaluate in terms of what our capital needs are in 2025. From where we sit right now, we feel like we're in a good spot in terms of our ability to execute on a lot of the site acquisitions we're looking at. But the market may change in terms of what they require from a CapEx perspective. I think there's questions about how much more expensive certain items are going to be if there are tariffs placed on imported goods. And so there's a number of things in here that we are still working through in terms of where our future build out costs going to go. I haven't my internal estimation is it's probably going to go a bit higher, just due to the fact that, if almost all of the components related to these build outs is developed abroad and there's significant tariffs placed on those goods, it's going to naturally increase the cost for development. But I think from where we sit right now, we have a lot of confidence in the capital structure and the balance sheet that we have today to be able to execute on our game plan to be a $30 billion company.
It's interesting about the tariffs that you bring up, because it obviously does add costs, but you would think it would add value to any existing infrastructure here as well. So it'll be interesting to see that play out as Trump obviously comes into office. Now, we've talked a lot about the HPC, the conversions, the pipeline. I wanted to chat a little bit about Bitcoin mining. You had talked in the past, Adam, about some of the restrictions as you emerge from Chapter 11, one of them being the requirement to sell Bitcoin within a certain time period of mining that. Is there any change to that strategy as we enter 2025? Will we see a HODL as part of Core Scientific strategy?
Yeah, we're getting much more opportunistic about holding Bitcoin in certain points in time since that restriction has been lifted. And, it's part of a larger strategy of just optimizing the fact that we're holding a very volatile asset on our balance sheet and being able to maximize the value of the volatility. Because our Bitcoin mining business is extraordinarily steady. We know exactly really how much Bitcoins we're going to be mining each day. And it provides us the opportunity to actually run a much more active strategy on the trading side, to be able to put some Bitcoin on balance sheet and be able to actually put a system in place where we can extract additional value out of that Bitcoin, which is important to us because right now, our majority of our income statement is Bitcoin focused, right? It's Bitcoin mining where our majority of our revenue is coming from. And so finding ways to maximize the value of that is incredibly important. If we can eke out an extra 5%, 15% out of that top line, that's incredibly important to us, especially as hash price continues to decline, as we continue to go into a much more constrained environment. I mean, we're at the point now where we're at institutional Bitcoin mining. Like we are fully there where we see hash rate fluctuate based on where hash price goes in the short term. And that's, software, that's better operators. We're a mature industry at this point. Maybe not everyone's mature, but enough of the industry is mature enough to be able to eke out value when economics change. And so I don't necessarily think there's going to be an environment where hash price is going to absolutely skyrocket. I mean, I think the numbers are, I think we need to go to $100,000 Bitcoin just to get back to Q2 hash price levels, which included, a few weeks of pre-halving. But I mean, this is a much more challenged market environment. So finding ways for us to extract additional value, like putting some Bitcoin on the balance sheet and being able to, operate around that from a trading perspective, if that creates additional value, then it's something we're going to do.
That's great. I mean, staying with the Bitcoin mining, and you just released your October report. So, I mean, one thing we know from you guys, and Bryce touched on it earlier, is consistent mining updates. And day to day, you list your Bitcoin mining on social media, so we're all aware. We don't have to wait sort of 4 or 5 weeks to find out what the total is. I mean, there's a lot of people on social media now have access to the wallets, and they're sort of like putting numbers out sort of like left, right, and center on an every other day basis. But you guys sort of beat them to it by putting out the daily. I was surprised nobody else has picked up on that and started to do the same. Normally when one does something, look at the operational updates. Once somebody does something different, everyone tries to follow or it's like keeping up with the Joneses, we say in the UK. I'm sure there's something similar in America. But it hasn't happened with the daily updates. You're still out there delivering those daily updates. One thing I noticed in the last couple of operational updates, it looks like the hosted elements of the business seems to be reducing a little bit. I think you've mentioned before on the podcast that, at some point in the future, profitability sits more with the self-mining and I suppose, strategy in a rising Bitcoin price. That's probably where most miners want to be. But is that sort of like your strategy going forward now to look to try and maybe utilize what power you've got in those Bitcoin mining facilities for self-mining?
Yeah, I mean, we announced, I believe it was on the Q2 earnings call, that we're going to be sunsetting the hosting part of our business to really focus on self-mining HPC. I think from where we sit today, in the limited the more limited capacity we have dedicated to Bitcoin mining with the 400 megawatts, that's going to come with a more lower power cost, better mining economics. We're going to be able to consolidate to more efficient machines. We have the deal with Block that we're working on today for delivery in the second half of next year. I mean, all of these things are going to result in a stronger self-mining business that we believe is more of the future than the hosting part of the business. So that's really what we're focused on. And we think it's the right strategy for the company going forward.
Yeah, and going back to June, you very much indicated in that meeting to all the retail market analysts from Wall Street, and Bryce and myself were fortunate to be in that group as well as a pretend analysts, that you were sort of like you're still, your core business is Bitcoin mining, and you're going to utilize power for the HPC as you see fit. So I mean, I imagine it would be safe to say that Bitcoin mining is staying part of the portfolio, because we have seen a number of other miners basically stop their growth in Bitcoin mining. One miner's even indicated they need to maybe split out the HPC elements of the business so that the market can appreciate both businesses separately and give them the proper due diligence that they maybe deserve. What's your thoughts on sort of like, the next 2 or 3 years? Are you still of the same thought that you had in June, or do you see maybe a changing of the guard?
So the Bitcoin mining business, obviously, there's the foundation of this company when it was founded back in 2018. As we look forward, we believe we're going to have a very profitable and consistent Bitcoin mining business. We have the software, we have the team, we have all of the elements, the design elements around the infrastructure. We have patents around many of those components as well. And as we look towards the block units that are coming, or the block chips that are coming in the second half of next year, I mean, we're really redesigning the form factor of machines, and we believe we can be a thought leader in that part of the business. And if we can actually continue to execute in the way that we've executed over the past 7 years, we believe there's room in this business to continue to operate a business that we're doing very, very well. There's no reason to exit the business if we have the capabilities to be the best in class operator of that business. So together, they fit very nicely together because there's a lot of crossover in terms of shared services between teams. And just in terms of the talent that we brought in on the data center side continuously over the course of 2024, they're adding value also to the Bitcoin mining part of the business. Is like, as we just completed the 100 megawatts in Pecos, we're on the Gen 4 design of our facilities, but it's like you're still making incremental changes to improve that design to be able to run machines, up to 110 degrees in the Texas heat. Those are things that we're doing that other companies aren't necessarily able to achieve. So we think we can still have a very profitable business on the Bitcoin mining side and couple that with long-term stable contracts on the HPC side.
A couple of extra questions on that, what you just mentioned there. One is, I was going to mention about the block delivery. I think it was something in the realms of about maybe 15 exahash of chips or equivalent. So that they'll start going in the latter part of 2025.
Yeah, we've said the second half of 2025.
Second half of 2025. And in terms of, you just mentioned there about the temperature. Are you thinking at all maybe utilizing immersion cooling technology, or do you think actually you've adapted the air cooling to fit for purpose? Because you're already operating. I mean, we're down in Denton at your Denton facility on that nice cool day where it was 28 degrees and everything was going okay on that day.
Yeah, I mean, we're sticking with air cooled designs for these machines. I mean, our forced air design is able to operate to very similar temperatures to what you're able to operate in immersion. And so we feel very confident in our ability to execute on the new design, especially how we're redesigning all of these new machines to potentially even operate them to even higher temperatures.
With regards to the block chips, I mean, have we gone through sort of like the ability of testing them, or is that we're still too early in that? I mean, we're seeing other competitors come onto the market now, so we're seeing even Bitdeer, they've announced many updates on their Seal miner. I mean, to be honest with you, they should patent that name because that's a cracking name for a mining. I want to go and buy a Seal miner maybe block's not the first on the list, but the name of the mining machine makes me want to go and buy one. But there's these other competitors coming out there. We know Bitmain dominate the market. They've got probably 8% of the market, but there are other operators now, and Block are trying to move into that space. Have you had a chance to look at what their technology brings to the table, and actually it's a good fit for Core Scientific?
Yes, we've seen previous generations of their chips, what their tape out looks like. We're incredibly impressed by the results. I would say from everything from the chip to actually bringing a machine online, that's really our internal R&D team. So we're designing not only the hash boards, the control boards, we're designing all of those things. We already have all of our test units for all of those. So we're very far advanced in terms of being ready and prepared, and we have our contract manufacturer set up to be able to intake all of these chips to be able to build these machines. I mean, these are all things that we're taking the fact that we've run over 700,000 machines in our facilities. So we know exactly from a repair perspective, how do you actually make these machines easier to repair? We're designing our hash boards around that. It's like the control boards. Okay, how do we limit the cost of control boards? Because control boards can be incredibly expensive if you want to replace all of them. So how do we integrate less control boards into a bigger system? And so we're doing all of these things to help limit the cost on a per terahash basis. And as you look forward, it's about the refresh cycle for machines. That is really one of the issues with the Bitcoin mining business. Is it's 20 to 25% of your top line revenue has to go just towards maintenance capex. And so that's why you're seeing these people that are in massive growth mode. They're spending 150% of revenue every single year on continuing to grow their business. We want to figure out how to bring that into the teens. And so that's really part of the strategy, is like, how do you make this a long-term viable business? And it's one of the ways is reducing your maintenance capex so that you can continue to refresh your equipment without necessarily having to refresh the entirety of the machine, which is, the chassis, the control board, the power supplies, all of these things every single year. It's like, oh, well, they're changing the power supply unit. Now we need to change PDUs. Now we need to change, X, Y, and Z. Well, now it's a bigger cost because now you have to upgrade infrastructure. And these are all the things that we're trying to eliminate from this process so that we can go out, buy chips at a price that is set out ahead of time, that is really more on a cost plus model than it is, price based on an ROI basis. All of those things are important to the longevity of the Bitcoin mining industry.
Yeah, we were lucky to visit your repair center at Denton while we were there for the visit, and to be honest with you, we can't say enough about that particular facility. I mean, the amount of maintenance items that get checked in a normal Bitcoin mine facility, it was mind blowing. The fact that you've got a team there literally around the clock doing that maintenance, it's a credit. You don't have to send as much of your repairs outside the facility. They can all be done on the side there. So it's really, really interesting, and I enjoyed that visit myself very much.
Yeah, it's rare. Most people never get to see people doing hashboard repairs in a facility, but it's something that we pride ourselves on, being able to do the most advanced repairs in the industry on site.
And it shouldn't be underestimated that that things do go wrong with mining machines across all facilities. We've seen, looking at a number of miners when they've had not as good a production numbers as you'd expect them to do, and so therefore it shouldn't be underestimated. I mean, you receive all these new miners from the likes of MicroBT, Bitmain, and Canaan, and the new entrants to the market. But not every machine's the same. Not every machine's perfect, and there will be changes due to environmental, due to software, due to chips, etc., like that. And things need changing. And it's good to see that you guys didn't underestimate that and got facilities on site. We know a number of other miners have done the same as well. But we spoke to some CEOs recently who still send kit to have to wait for supplies to come in to do replacements, and so that can hold up production, especially when you've just purchased a batch of new machines. You want to make sure that they're able to run quickly. So it should never be underestimated, that part of the business.
Yeah, and we can actually forecast based on seasonality what parts are actually required, because we have all of this data, we track all this data, so we can actually supply all of that equipment at each of our facilities because we know all the historical data. So we can say, oh, we need X amount of these parts to be able to be prepared for the hot part of this weather where we generally see these issues in the machines. And so we never want to have a machine that we have to wait on parts to be able to get back online. That is never a place you want to be. The loss that you experience from not having that one machine online is significant. And so if you have a backup of hundreds of machines or thousands of machines, which are possible if you have kind of a bizarre outage for some unknown reason, it's like, well, we have all those parts on site. We're fully prepared. We're going to get these machines up and hashing in, 100 or 200% faster than any of our peers could.
Yeah, not your first rodeo. You guys know exactly what you're doing around there. Just out of curiosity, approximately how many people work for Core Scientific internally now, Adam?
Yeah, we have just over 300 people that work for Core Scientific. That's probably about it's over half of those actually operate out of the facilities. About 2/3 of them actually work in the facility. So between data center technicians are more than half that employee base. And then we have a lot of other roles outside of data center technicians that actually operate on site as well. So about 2/3 of our employees actually operate out of our facilities.
Gotcha. Yeah, when you start to think about sourcing this talent, you talk about up to 2,000 people during peak construction, and then the difficulty in finding this data center expertise, very valuable resource what you're sitting on there in terms of just the human capital. Now, I want to get a little political on you too here, so feel free to share as much or as little as you feel comfortable. I know the Bitcoin CEOs have obviously had interaction with Trump this year. He was down in Nashville. You guys have had a number of meetings as well out in New York. So I wanted to get a sentiment from you, how you think this election's really going to impact your industry. You've talked about tariffs on one hand. We've seen the impact on Bitcoin price, on the market itself. Can you give us some insight as to what the next 4 years from a Canadian and a UK guy looking from the outside here are going to be like for the Bitcoin and data center industry?
I think it's a big net positive for the Bitcoin industry, broadly speaking, but also Bitcoin mining. I mean, if you talk on the 3 points that Trump harped on, not only during the meeting in Mar-a-Lago with the Bitcoin mining CEOs, but also what he said publicly, not only at Bitcoin Nashville, but publicly about the Bitcoin and energy industries more broadly. He's focused on strong Bitcoin policy to enhance the value of Bitcoin and the value proposition of Bitcoin from a government level. That's very strong. He wants to be energy dominant. He did make the comment that he wants all Bitcoins to be produced in the United States. It's never going to happen, but love the thought. And if he continues to push for that, that's incredible. But energy first policy, or really having an energy dominant policy, is actually incredibly important for Core Scientific, because we're large energy consumers in the United States. We're not only from the Bitcoin mining side, but also from the high performance computing side. And Trump speaking about wanting to be a leader in artificial intelligence that's actually done in the United States. I mean, you talk about the 3 categories that Core Scientific is focused on and the 3 priorities for Core Scientific. They align very well with Trump's priorities right now. So we're excited about what he's going to bring to the table. And we're very hopeful that he follows through on a lot of the things that he was promising during his election cycle.
Most definitely. That's going to be the key difference here, is whether or not he follows through on those commitments. But we were in Nashville as well. Very strong sentiment from both RFK and Trump, who have obviously now teamed up to take on the White House. I know we've covered a lot here today, Adam. We really appreciate the time. Anthony, I'll kick it your direction for any closing thoughts or questions that are maybe still on your mind, and then we'll give Adam the opportunity to wrap up.
Yeah, I just had one question, one comment. I'm assuming that your 400 megawatts that you've allocated to Bitcoin mining remains out at the moment, and that could grow depending on what you see in the future, or is there any opportunity of moving some more of that across to HPC? That was a question from a retail investor, so I thought I'd just ask that one, and I have a comment after it.
Yeah, I mean, from where we sit right now, I mean, those are megawatts that are dedicated to Bitcoin mining. If things change on any of the categories, whether it's power, latency, or environmentals, that we have the opportunity to change. There's the opportunity it could potentially go to HPC, but from where we sit right now, those hurdles haven't been overcome. And so right now we're completely dedicating that capacity to Bitcoin mining, and we're expanding it as well. I mean, you saw the expansion over the past few months at Pecos of over 100 megawatts.
Yeah. And the other comment is, obviously the market do like probably what was said yesterday, because the share price is currently at 15.42, rise of 7.5% today. So sitting well when you compare yourself to the rest of the miners at the moment. Most of them are actually showing a negative position at the moment. But bear in mind, we saw some absolutely ginormous rises yesterday from the likes of Cypher. And actually, I think I put a note to some of the retail investors, and they said, "How's your portfolio looking today?" And I said, "Portfolio's doing really well. Disappointingly, Core Scientific's only up 10%, which was the lowest increase of my portfolio yesterday. So disappointingly at 10% increase. So you're having a great year, Adam, and really thanks today for the transparency that you've allowed. It's always great that you come on the channel and answer all the questions that we have, and there's been a few other questions that have come out through the conversation as well. So that's really, really pleased to be part of that today.
Yeah, no, I appreciate the time. And one of the things that we really like to pride ourselves on is things that we say we're going to do, we know we can do. And I think 2024 speaks for itself. Everything we said we're going to do, we've done so far, and we look forward to continue that trend in 2025.
Delivering on commitments. You've sure earned our trust, Adam. We know you deliver on commitments. We're excited to see those commitments come to fruition. Next year is going to be absolutely huge as you start to roll out the CoreWeave deal. Anthony, I'm showing CORZ right now 9.7% up, 1572. So I don't know. We talk about latency. One of us has a latency issue here. We shouldn't be setting up a data center, I guess, in one of our basements. But Adam, thanks so much for the time here today. Congratulations on a fantastic quarter, a super strong year. We keep saying going strength to strength at Core Scientific, and that really is exactly what's going on. So you guys, if you're still watching, hit the like button. Feel free to subscribe. Let us know below if you're holding Core Scientific, what you thought about earnings and your outlook for next year. Adam, we'll see you back here in a month or so.
Thank you, guys. Appreciate the time.